everybody, and welcome to episode number 11 of the Traders Podcast. I am your grateful and appreciative host here, Jeremy Ritz, welcoming you back. Took the week off last week, but coming at you with two brand new episodes this week, 11 and 12, and very excited about the show this week. Did want to start out by saying that for the previous episode, when I was playing the guitar for the Ask a Trader segment, the microphone didn't pick it up, so it looked like I was just playing air guitar. So I will fix that today. I'm going to record a separate little intro segment, so that's always there for whenever we have the Ask a Trader segment. So today's topic is paper first, cash second. And you might be saying, well, what in the hell does that mean? Paper first, cash second means one thing, that you practice trade, you paper trade, you back trade before you ever start trading with real money. And it's something that I didn't do when I started my journey, and it's something that I should have done and would have saved me some money along the way. So I want to spend some time talking to all of you about that today, how that works, what it looks like, how you could do it using TradingView. And so I'm very excited to talk about that topic with all of you. We also have the Ask a Trader segment that's coming up along with the guitar intro. And then finally, we're going to continue with our case study of ROKU and take a look at how it's moving or not moving at all. It is stuck in a range, but we're going to get into that. Before I do, just want to remind everyone that I am teaching a profitable options course that's going to start on April 4th. The final day to register will be this coming Saturday, March 30th. And this is the last week to sign up. Very excited to teach this course. Options are other financial instruments. They're not shares that you can trade, and really you can leverage lots of shares with very little money, and they're highly, highly profitable if you know how to utilize them. And trading options should be part of any trading plan, trading portfolio. So if you're interested in learning that, please sign up. I'll have that course linked in the show notes. It'll be great. And again, registration ends this weekend, and we're going to kick that off next Thursday, April 4th. Hard to believe that Make It Happen March is almost over. The final day of March is this Sunday. We're going to be celebrating the Easter holiday. April 1st kicks off on Monday. April Fools. Oh man. Hopefully there's no April Fools in the market. Things have been just entirely bullish. But very excited to again be teaching that class, and hopefully you sign up for it and take part of it. And also too, if you're interested in learning to trade the stock market, remember that I do offer personalized one-on-one coaching, building out a plan to meet your specific needs and goals, what you're looking to do via the markets. If you're interested in that, just reach out to me at couragepaysbetter@gmail.com. Hit me up on my Facebook page, comment on this video, and let's set up some time to talk so that I can help you, not only with my professional trading background and what I currently do, but also, I was in education for 18 years. So I do know how to teach and how to teach well. So with that said, it's time for Ask a Trader. And here is the intro for that right here. All right, so hopefully you enjoyed that. So it's the Ask a Trader segment. 3 questions that you want to ask a professional trader. So the first one, Tesla is beat up pretty badly. Will it ever come back? And if you've looked at Tesla's chart anytime soon, I'll put it up here on the screen. You can see that it's been in a bearish trend for quite some time. Most recently, this past January, it had a bad earnings report, and all EV companies right now, electronic vehicles, are hurting. The high interest rates are preventing people from being able to get loans or being willing to take out loans to pay for these cars because they can be costly, and it's hurting sales. But people tend to forget that Tesla is more than just an electronic vehicle company. They have a lot of things going on. They have Neuralink, which is the brain chip implant that allows people, they had a recent video of a paraplegic who was able to control computer with his brain. So there's technologies beyond just cars. There's the solar energy, there's the Optimus bot. So will it ever come back? Yes. The question is when? And I think it's going to be a little bit of time before you see Tesla start to really rally and get back into the mid 200s, the to 300s. The last time that it hit $299 was this past July into August, and then that's when it really started its downfall. So once interest rates begin to get cut and there's a little bit more optimism and a resurgence of EVs across the board, you'll see a rebound in Tesla. Tesla's not going to go to zero, but there's still room for it to come down. You can see there are some moving averages below it at the 154 range, I think, off the top of my head, and then into the 140s. And then it could, now this would be worst case scenario, retest the lows that it had in December of 2022 when it hit around $100. And that would be pretty bad for Tesla, but eventually it's going to bounce. When? We don't know. The best thing to do is look at the charts, but right now there's a lot of weakness in it. It'll eventually bounce back. So thanks for that question. The next one, what is your biggest miss? And what I mean by that, what is the biggest profit that you left on the table with the trade so far in your trading career? So there's been lots, and you could say that about anything. And basically what this question is getting at is, have you got out of a trade too early only to see it go completely up further and you just missed out on a ton of profit? The answer is yes, and it sucks, and it's painful, and you're mad, and you're frustrated. You're saying, damn it, if I would have just stayed in, I would have made so much more money. Recently with NVIDIA, I've traded it several times since earnings, and my original goal was to stay in it till it hit 1,000, and I got spooked out so many times and made nice profits. But if I would have just stayed in on a few of those trades, man, I would have been looking at such a significant profit. So it happens, but one of the trades that stands out, and I think I may have mentioned this on one of the earlier episodes of the podcast, was a Microsoft trade from this summer where I was trading call options and I got out for around 13K and great profit. Had I stayed in, I think just like a week later, it would have been in the mid 200, around 250, a little bit over 250K. So that one hurt pretty bad. So, but the thing is you're never going to be able to time the top, call the bottom. Just have to be grateful for generating a profit, making a profit. And yeah, 13 versus 250, big difference, but those opportunities are going to present themselves. And if you're in the market, if you're trading, you're always going to have an opportunity to hit those. So you can't sit there and dwell on it. It stings, but I will get that back. Yes, I will. And then the last one, the market is running bullish, seemingly without any breaks. What could stop it? Well, a lot of things could stop it. So you're right. The market is significantly bullish, especially after the bear market of 2022. I talked about this in a few episodes prior, but after COVID, a lot of money was printed, inflation was high, so the Fed had to begin increasing rates, and that just drove the market down. That caused that bear market that really bottomed out in October of 2022. And we've just been grinding higher since then. And there's a lot of optimism around the Fed beginning to cut rates, which in their press conference last week, they talked about how there will be at least 3 rate cuts this year. And there are some people who question whether or not that's true, because a lot of the inflation reports that have come in have been hot, and people are saying that inflation is not under control. So it's unlikely that the Fed will cut rates. Now, if that's the case and they hold these rates higher for longer, and let's say that those rate cuts go from 3 to 2 or from 2 to 1, your market makers will respond negatively to that, and you will see a pullback in the market. Now, here's the thing. I can't foresee a bear market coming anytime soon. Not to say that it can't, but what the market is in desperate need of is a correction or a pullback anywhere from 10 to 20%, because it's just been going straight up. And when things go straight up, guess what? When they come down pretty hard. So a nice little pullback and rest would be good at this point. But What could stop it? What could cause this thing to just fall off of a cliff? Well, any type of calamity or disaster. If you think back to COVID in 2020 and you look at the chart, you could see what happened when the world shut down. The market just dropped hard. Now, it didn't go to zero. And that's the one thing to keep in mind. A lot of people think, oh, you're going to lose all your money. Stocks just don't go to zero overnight. And honestly, the only way stocks going to zero is if you're buying a trash penny stock company, which you should never do. Buy good, profitable companies that have long-standing reputations. But that's what it would take at this point. If there's some type of calamity, war, something really bad happening that could just really tank the markets, and or if inflation continues to run hot and the economy falls into a recession and we can't get it under control and we continue to have hot inflation reports, that could really cause some selling and some panic in the market. But it's a bumpy road to get back to 2% inflation. I think over time we will get there, but the market is in desperate need of a pullback and a rest. So hopefully that was helpful. Appreciate your questions. Please, any questions that you have, put them in the comments and I'll get those in the next segment of the Ask a Trader. All right, so today's topic, paper first, cash second. What the heck does that mean? Well, if you're going to become a trader, if you're going to invest, then you need to do what we call paper trade first. And essentially what that means is you're trading the live market, but you're not using real money, you're using fake money. And there are a lot of resources out there that you can use to paper trade. TradingView being one of them. That's a charting software that I always advocate for. If you want to learn trading, if you want to study charts, you must have a TradingView account. But you can set up trades in TradingView. You can set your entry points. You can set your profit taker. You can set your stop loss and see in practice, hey, if I were to take this trade with real money, how will have worked out? And so you want to spend your time doing that, trading the market with fake money to see how you would do and really just track your data to see, all right, how many wins versus losses do I have? And do that for an extended period of time over and over and over again until you build up your confidence and belief that, hey, I can do this. I can trade. Because you don't want to just start trading real money out of the gate like I did. Okay. That's how I started trading. I started trading on my phone. Where's my phone? Here it is. So I had Robinhood on my phone, the Robinhood app, and I would just enter trades. Wouldn't even set a stop loss. When it would go up, I would sell it. If it would go down, I'd hurry up and sell it to minimize the loss. But I didn't do any paper trading, and I could have saved a lot of money if I would have paper traded prior to trading real cash. And so I advocate and strongly encourage anybody out there considering day trading, investing, swing trading, that just do it pretend through TradingView, through some other resource. Do it there first and do it over and over and over again until you have a data set built up so you can see what your results are. And then once you're able to do that and you're consistent over an extended period of time of a few months, at least 3 months, then at that point, you could dip your toe in the water of using cash, okay? But spend some time trading the real market. Now you might say, well, I'm working during the regular market hours, so I can't trade the live market paper trading. Well, here's what you can do. There's this thing that's known as back trading. All right. And there's a feature on TradingView that it's called the bar replay, where you can go back in time and simulate the candles and replay the candles. And you can go back in time and just click through the candles and set up trades that way and determine whether or not you won or lost. You can manage the trade, and that's going to build your ability to read charts and to be able to trade them. And again, if you're not able to paper trade real markets, you can do back trading. Also remember that the crypto market is 24/7. So, and if you could read a chart, you can trade crypto. So on the weekends, hop on TradingView, paper trade crypto. Forex. Again, if you could read a chart, you could trade Forex. Forex is a 24-hour market. So Monday through Thursday, you could trade Forex in the evening. So there's excuses out there for saying, oh, I don't have time to paper trade, or I can't back trade. No, it's all garbage. It's bullshit excuses. You could do it. There's options. I just gave you several, but that's what you want to do first. You want to back trade, paper trade first, build your confidence, see that you could do it. And then at that point, you shift over to cash. Now, when you make the transition to cash, you're trading real money. You need to start small. Okay. And when I say start small, we're talking about your risk. Your risk at that point when you're using cash, honestly, in my opinion, should be no more than $10 to $20. That's it. And remember, when you set your stop loss, and you'd have to go back to the boot camp videos if you haven't watched them, you could set your stop loss so that it dictates that if it is a losing trade, you're going to lose no more than $10 to $20, right? And what you want to do when you're trading real cash is build consistency and success with that $10 to $20 risk unit over time. And once you've done that, you've built success, you're consistent. What do? All right, I'm going to go from $20 to $25. And then from there, you're trading. When you're consistent and you're successful, at that point, then you say, all right, I'm ready to move up. So maybe you move up $15 and you slowly, incrementally, gradually increase your risk over time so that in a couple of years, you're trading $1,000 R, a $2,000 R, a $10,000 risk, right? But you have to start small. If you start with these big, exorbitant numbers, you're trading $500 risk unit, $1,000, be prepared to lose all your money right away. All right. That's why you have to start with paper first and cash second. That's what smart traders do. And like I said, this dumbass here, when he started trading real money, learned some hard lessons, I made those mistakes. And I'm telling you, if this is something you want to learn, start paper trading, back trading first, shift into cash, go slow, build up over time. That's the way to do it. All right. And that's the topic for today. Now we're going to shift gears a bit and we are going to do our ROKU case study. So let's pull up ROKU. No intro song for ROKU here, but I have it queued up here on the screen. Little ROKU action. Here we go. Let's take a look at it. Let's make it bigger. And we could see that, man, we are just hanging out in this range. Let's count these candles. I mean, look at this. So again, we know we had this gap down on earnings. We fell even further. And then just look, this range area right here, we've been down here for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25 candles. So this candle hasn't closed yet for today. But you could see we bounced off of this trend line several times. And most recently, last week, we came close to bouncing off of it on Friday. And today we're making a little bit of a bullish push back up over the 10 EMA. That's the 10-day exponential moving average. That's this black line. But you can see we're having trouble closing and staying over here. And the other thing that stands out is anytime we get over this 10 EMA, you could see the selling pressure coming in with these upper wicks. Remember, longer upper wicks indicate selling pressure. So until ROKU can get a really strong close above this 10 EMA, it's going to be difficult for it to push higher. And then if we look at other resistances above it, we see that we have this 20-day exponential moving average. So this will be the next area of resistance that it would have to break through, the 66.17 mark, right? And if it can get above that, there is room for this thing to go up into the 100 simple moving average on the weekly at 71.27, or the 50 EMA on the daily at 73.51. So what ROKU is in need of is some type of catalyst, some type of good news that's going to push this thing higher. It's just not getting it. When you look at these candles, they're just kind of small and uninspiring. You have low volume, which shows me that people aren't really interested in this stock. They do have an earnings report coming up here on April 25th. That potentially could move the stock, but at some point, this has got to get up and go, because this consolidation, which typically means there's a bigger move coming, it doesn't necessarily mean that it's going to go higher. It could mean that it's going to go lower as well. So while this trend line is held historically, because if we zoom out, we could see that history is meant to be broken. So what's going to be interesting to see here is, does it hold or does it fall? And then the next place we'd be looking at is those lows from COVID in 2020, that 58, 52, if that would serve as a bit of support, or if maybe we get this catalyst, some type of gap up, and this thing pushes higher. But ROKU really hasn't moved a lot. I thought it would have moved a little bit better than it has, but it hasn't. So we'll keep an eye on it. And that is the ROKU case study for today. All right, everybody. Well, that's going to do it for episode 11 of the Courage Pays Better Than Fear, the Traders podcast. Very happy to be back with you. Hope you took something from today's session. Don't forget about the options course. Sign up for it. The last day to do that is this coming Saturday. I hope to see you be a part of that. If you're interested in coaching, just reach out to me. And that's going to do it. Have a wonderful rest of the week here. March 2024, we're wrapping it up, getting ready for April. And again, I appreciate you so much. Have a great day. Take care.